In our current world, more and more companies are doing business through the internet, not to mention the fast-growing e-commerce companies. One of the concerns of the OECD has been the possible non-taxation of services in the market jurisdictions, that is to say, where the services really are consumed. If governments of the market jurisdictions are unable to obtain a desired amount of revenue from digital suppliers, consumption taxes like VAT become an appropriate means of taxing consumption. The main idea of BEPS Action 1 is to ensure a reasonable allocation of taxation rights, a balance between the country where the income occurs and the country where the services are actually consumed. New VAT rules in the EU for electronically supplied services were implemented at the beginning of the year 2015. It means that telecommunications, broadcasting, and other electronically supplied services rendered by EU suppliers to EU private customers are now taxed where the customers are established, and not anymore in the country where the sale occurs. In order to apply the correct VAT rate, EU suppliers now have to check where their customers are established. Therefore, EU suppliers may have VAT registration in multiple jurisdictions. To simplify this process of multiple registrations, EU suppliers can choose to account for VAT across many EU member states through a single electronic declaration, called Mini One-Stop Shop or MOS. This declaration can be filed in the country where the supplier is established. As far as the EU is concerned, because VAT on electronically supplied services is now applied at the place of the consumption, a reasonable allocation of taxation right is ensured, and the concerns raised in BEPS Action 1 have already been addressed.
For most multinational taxpayers, that would be unwise. There are direct consequences that are already foreseeable, for example, the need to prepare country-by-country reporting. These can be acted upon now, and indeed often need a long lead time to be ready. The reporting required in country-by-country reporting will need systems and process modifications that need months or even years of planning. There are also clear trends that, even in the absence of detailed provisions, allow preparation of next steps. Action 2, neutralise the effects of hybrid mismatches, has widespread support and seems certain to come into effect in some form. Multinationals should screen their international operations already to identify hybrid mismatches and either get ready to act or even act proactively already.